Good morning to all of you. Let's dive into it, but as was said initially here, and I can just repeat that, we are not going to comment on the strategic review or the formal sales process that the company has announced earlier. Further announcement around that will be made when appropriate. Let me just go directly into business as usual, and let me just start out assuring everybody that first quarter of the year has been a very active one in Benchmark. We feel that we have managed to take many decisive actions and achieved a lot. Some of these actions are reflected in the numbers of the quarter. I will come back to in a minute. Some of them, or actually most of them, are more related to the long-term work that we are conducting on the journey that Benchmark has been on for the last 3+ years, and is still on, making sure that we're taking out the large potential that is in the group as well as in the different parts of the group. And it is in this perspective you should see the group. We are lucky to have a unique company that I am particularly very proud of, uniquely positioned in a growing global aquaculture industry that poses a lot of opportunities for those who are lucky enough to be well positioned, and Benchmark definitely are. With our 3 business areas where we hold market-leading positions in what we do, providing highly specialized mission-critical products and solutions to the whole aquaculture industry globally, products and solutions that are mission-critical to our customers, the industry, for them to take out the potential of becoming as sustainable as they should and could be in the future. It is the positioning of the group, together with the actions that we have done over the past years, that has led to the more than 60% compound annual growth rate for the last 2-3 years. This is also the trend that we expect to continue in the medium to long term, as our technologies and solutions will remain key for the growth of the aquaculture sector. Then, moving over to summarize some of the highlights of the quarter that we have just ended. A quarter where we have been able to keep the momentum and deliver to our expectations in the 2 main business areas, genetics and nutrition, at the same time that we have taken decisive action to transit to less capital-intensive business model, the 3rd business area, health. The latter is something that I and you have been talking to the market about for a long time. In terms of the numbers, Q1 revenues ended at 40.5 million. This is 26% below a strong Q1 last year. But if you compare it to our last quarter, Q4 FY23, it's 11% above, showing that we are maintaining a quarterly momentum. Out of the gross revenues for the group, genetics contributed revenues of 15.2%. This is a solid performance, meeting our expectations, seen again from Q1 last year, when the group benefited from supply constraints of salmon eggs in the market in Norway. Advanced nutrition revenues were 19.3 million, 13% above our last quarter, Q4 FY23. And over time, I've talked about the strong performance of our advanced nutrition team, or INVE. And again, this quarter, we are reflecting a good performance in the context of a continuing soft market situation. And finally, health revenues ended at 6.1 million, which is lower than we anticipated as late as in November last year when we had the last presentation. And this is a result of the biological challenges faced by certain customers, leading to cancellation of good orders of Ectosan Vet and CleanTreat in December. This significantly impacted the result we show for this business area in the period, and as I will come back to, led to decisive actions to start migrating to a less capital exposed, more sustainable business model for this business area. Due to the lower revenues and despite a reduction of operating costs over adjusted EBITDA, excluding fair value movements, ended at 7.5 million. This is equivalent to 18% margin. However, it's pleasing to see that the margins in genetics and advanced nutrition, or two main business areas, improved compared to a year ago. Our balance sheet remains strong with cash of 24.2 million, available liquidity of 36.4 million. Net debt, excluding these liabilities, ended at 57.5 million. And as Septima will cover in her part on going through the financials, this is a quarter that typically has the heaviest cash commitments during the year. Moving over to give more granularity on the performance in different business areas. And let me start, as usual, with genetics, where we have landed a quarter in line with our expectations, with solid performance in our core salmon genetics business and good progress on our growth vectors. As we clearly stated in our full year presentation in November, we did not expect to see the same volumes egg sales in Q1 this year as we did in Q1 last year. This is due to the usual circumstance that we had back in Q1 last year when we benefited from shortage of salmon eggs in the Norwegian market. The 86 million egg sales we landed in this year's Q1 is reflecting a more normalized volume in this quarter of the year. And the results we show from our core salmon genetics business is, besides reflecting this, also reflecting somewhat lower periodic income from our harvested fish than last year, but also an increase in income from our genetic services that we now are building up. Still not too big numbers on genetic services, but we see these services as a business that will really grow over the coming years, and which will be very attractive from a profitability perspective, being a service activity as well as helping enforcing our position with customers. A key element to our strategy in the core genetics business is to move forward towards a differentiation of our products, building in traits, new technologies to make sure that we can differentiate and justify higher value in the genetics that we see today. This has been a topic that I've addressed also in previous presentations. A huge value creation potential sits within this in the coming years. This is also why we have had, over time, a deliberate strategy to strengthen our effort to take on this potential, building a scientific team with world-leading competences, which is led by Ross Hughes. In this area, we continue to progress our work both on the previously announced sterility project, as well as our positioning to be in the forefront of gene editing technologies. As I stated, we believe these areas will be critically important in the future of specialized genetics in aquaculture, and we expect to see results of this in the years to come that further justifies and visualize a fair valuation of what genetics provides of value to them. While these technologies are still remaining in development, and as a first step on the way, we have post-period launched new specialized premium lines of salmon genetics in the market. These lines are based on innovation in our existing technologies, including genomics and cryopreservation, to optimize our genetic design, focus on selection intensity on the traits that give the most benefit to customers. As I said, this represents steps on the way to introduce further specialized value-creating genetics into the market. Moving over to our growth vectors within genetics, and starting with Chile, we continue to see increased commercial traction, translated into revenues of 0.9 million, taking us closer to profitability. The growing commercial traction in Chile is underpinned by new customers and repeat orders on the back of growing confidence in the market of the performance of our Chilean salmon genetics. We have a good and very competitive product, and the industry is starting to recognize it. Sales of shrimp genetics were brought in line with prior year, 0.3 million. A key element of actions taken in the last quarter has been the integration of shrimp activities across genetics and advanced nutrition, driving commercial synergies and cost savings. We have managed to execute on this in a successful way, finally taking decisive steps towards combining the unique commercial network we have within INVE or Advanced Nutrition with the leading genetics competence and capability that the group is also possessing on the genetics side. The immediate effect of this is, of course, cost synergies. And longer term, the combination will enable better market penetration and ability to combine an offering of world-leading genetics with early stage nutrition. And supported with our excellent technical teams and commercial teams, this is an offering at scale that no one else has in the market. Finally, on the main point for genetics, just to mention the incident that we had post-period, when we reported an isolated incident with detection of ISA virus on one fish at our facility in Salt. The isolated tank containing the affected fish is, as said, isolated. It's an isolated unit with a unique fish group, with separate water systems and farming equipment. We have been working closely with the Food and Safety Authority in Norway on the issue since the incident occurred. And despite rigorous testing, there have been no further signs of ISA in the facility or even in the specific tank from which the one fish originated. All the fish in that tank were culled. We do not expect the incident to impact our delivery capability. We have accessible growth from other fish groups in the facility, as well as access to additional supply of eggs from our multiplicated bullocks in Norway that we've been working with for many years, and from our own facility in Iceland. Moving over to the financial overview of the different parts of the genetics business, as we have presented them to you over the last quarter to give you a transparent insight into the different elements of genetics business. The numbers that you see on this slide are, of course, as the business is now, and are including the group allocations of corporate costs that we apply as running business. As you can see from this, financial figures for our core genetics is reflecting a more normalized sale of eggs for the quarter, upholding the margin picture of 28% compared to a similar quarter last year. You can also see the mentioned progress that we have had in Chile and in our shrimp genetics business, reducing the loss and the gap towards profitability for those business areas. That has been an important focus, and it is an important focus for us. Finally, you see the growth in genetic services, still small numbers or from a low level, but we have chosen to carve them out as a separate column, as this is an area that we are focusing on and expect to generate more substantial numbers in the years to come. It's a profitable business where we also have started offering a very competitive genotyping services to clients around the world, which will add another dimension to this business in the time to come. Then over to the advanced nutrition business, or INVE, which is the well-known brand of this business in the market. Here we are again demonstrating a very strong performance in a very soft market, and we keep well positioned for when the market again turns. I have repeated many times how proud I am of the team that we have in Benchmark, and in particular how impressed I am with how we have been able to perform in the advanced nutrition area despite the soft shrimp market that we have experienced over more than 1 year now. Market-wise, 2023 was different. And for those of you who are interested, just look at independent reports and you will see that. And the soft market conditions in the shrimp market is continuing to financial year 2024. Despite this, we have been able to uphold our performance in advanced nutrition, which is also reflected in our Q1 numbers. Top line is up compared to last quarter, comparing it to Q1 FY23, illustrating that we have kept the momentum in the business the last months. Compared to fourth quarter last year, we are slightly down on top line and adjusted EBITDA 7% in constant exchange rate. But given the market conditions we have been working in, we know this is a strong performance. And those who are working in the same markets will surely recognize this. If you take a more granular look at how we have been performing, we see that we have a strong performance in the marine fish markets in Europe. These markets have not been easy either, but we keep on performing regardless. Where we see the biggest challenge is in the soft shrimp markets, where production regions all over the world, I would say with the exception of Ecuador, is struggling and lowering their production, which of course has a short-term impact on our accessible market. The fundamentals behind the situation in the shrimp market remains the same as I told you about for many quarters. Macroeconomic factors depress the demand for shrimp in the end markets. This, I would say, includes all the main markets for shrimp, but it will eventually turn. When this happens, it's of course difficult to predict, but it will happen. And with the current organization and momentum we have in our advanced nutrition business, we are sure that we are well positioned to take advantage of the upturn when it comes. I would also like to mention the ongoing innovation work and on innovation and technology that we have in India. SnapArt being the latest launch. This has been a success in the market, and we have currently more demand than they can supply for this technology. That's a good position to be in. This is a good example of how we work, adding technology and technology services to our offering, making sure we help customers perform better. Over time, this is for strengthening our market positioning, paving the way for further market penetration to increase share wallet or to new customers. Finally, on advanced nutrition, in order for you to understand what's going on our efforts to be agile and adjust to the market conditions. We are constantly seeking efficiencies, making sure that we have a setup that is adjusted to the market reality and being as effective as possible. A good illustration of the effects of this continuous tuning of the business is the development of the adjusted EBITDA margin that has increased to 24% despite slight lowering of the top line compared to one quarter to Q1 1 year. Finally, over to health, the area where we have taken the most decisive actions this quarter. While we had good treatment volumes in November, we experienced the fish health issues by certain customers across pancreas disease, BKD, general weak fish health in Norway. That led to cancellation of what we saw as good orders for Ectosan Vet and CleanTreat in December. This was hitting us hard in this month as we were less exposed to very capital-intensive systems and vessels, including full manning, and they were sitting idle during the whole month. This really illustrates the challenge we have been talking about many quarters on the current operational model and setup for CleanTreat. Our unique technology for environmentally friendly cleaning and treatment water for medicinal treatment of sea lice in the salmon sector. The current configuration leaves us with an exposure in periods where, for instance, there is fluctuations in demand, for instance, due to fish health issues that prevents the farmers to use the system as intended. Given the experience we now have for more than 2 years since introduction, we have therefore taken decisive action to migrate the business model. One vessel is now decommissioned, and we are left with one system operational in a transition period. The ultimate business model we are seeking is no financial exposure for us on the CleanTreat systems. The long-term solution that we have told you about for a long period is to get the CleanTreat systems integrated into future wellboats owned and operated by customers or service providers. We have done the groundwork to make this happen, and the design of such a system is in place through our partnership agreements. We have entered into with leading wellboat equipment provider MMC and leading wellboat designers. And together with them, we are in the market promoting this solution as part of the offering new wellboats in the market. As alluded to also in the year-end presentation in November, we are also working on an alternative barge solution that will take down the cost of the solution, the infrastructure for the farmers. The cost of the barge is significantly lower than PSV, where the CleanTreat system is currently sitting. Thus, the infrastructure cost of such a solution will be significantly lower than the current setup. We are currently doing the technical configuration of such a solution that will be offered into the market during the winter, I would say winter and spring. Also, with this solution, our assumption is that the infrastructure investment cost should be carried not by us, but by the farmers and customers, leaving us with lower exposure to the infrastructure. As part of the actions taken during Q1 and into Q2, has also been to adjust the health organization to reflect the migration to a new business model. These actions are already taken and is expected to lower the operational cost base for the health organization in the period to come. After having said all this health, let me remind you all the following. The need for Ectosan Vet and CleanTreat as a solution for the industry has not changed. In my view, rather to the contrary. Sea lice remains the largest sustainability issue of the industry and is causing many of the effects on fish health, fish welfare, and eventually shows in the high mortality numbers that the industry in Norway around the world is faced with at the moment. Also, the feedback we continue to get from our customer using the solution confirms the initial value proposition of it. Solution is very efficacious to kill sea lice. It's ideal for fish welfare, fish health, as the medicine do not have any impact on the fish and do not create any mortality. It also prevents unnecessary loss of feeding as the fish goes back directly into feeding after feeding. So what we are doing now is to adjust the business model to what is right for us, provide our own solution, as well as for the customer, taking down our financial exposure to what we should have and providing a less costly solution to the customer. And the potential of the solution remains the same. Finally, at the end of my long initial remarks, just 2 words on Salmon, the other offering we have within health. It keeps getting new life as a very efficacious solution, also in the combination and complementary to Ectosan Vet. Sales of the medicine has continued to grow well in all regions, shifting a little bit towards the regions with lower price compared to last year's Q1. Our belief in Salmon has grown over the last 2 years, and must be honest to say that, and it continues to grow, as we also see now new regions in Iceland, for instance, coming in, obviously in need of solutions in the years to come. So, with these words, I would end my part of the presentation and leave it up to you now, Septima, to go through the financials of the quarter. So, over to you, Septima.
Thank you, Trond. So, as we move to look at the numbers, so on this slide, of course, we have the Q1, which we will talk to, and it's comparative for the year. But we've also included the Q4 numbers so that you get a sense as to the evolution of the business from the previous quarter into this quarter. As Trond had referenced previously, we didn't benefit in this quarter from the same abnormal high sales levels in the first quarter of last year, but we did perform as we had expected, particularly within our genetics and nutrition business, which was very pleasing, and they are still on track for the year to produce good outcomes. We were slightly disappointed in the health performance in the quarter relative to last year, but as we've noted, we've taken grips to adjust that from a cost point of view. Looking at the gross profit of £18.4 million, that represents a gross margin of 45%, which is flat versus last year. But it's also important to consider that excluding the health business area, the margin would have grown from 42% to 49% quarter on quarter versus last year, which shows good progression from a margin perspective in our genetics and also our nutrition business area. Looking at our R&D, so our R&D is looks like it's flat at this point in time from an investment point of view. But as we spoke to previously, in financial year 23, we reorganized our R&D activities to ultimately bring some of the activities in-house and ultimately allow us to exploit the investment that we had in R&D to get more out of it. And we have been ramping up our activities during last financial year and into this quarter as well. Given the lower sales and trading activity, there was a very high focus on operating costs, ensuring that we didn't spend what we don't have, and that has remained during the quarter, resulting in operating costs of £10.5 million. So, with exceptional costs of 0.5 million also, it's also important to realise that this 0.5 million was costs associated with our restructuring of the shrimp genetics business area as we moved it into the operational structures for within your nutritional business. It's also important to remember that for this financial year, the shrimp genetics will continue to be reported within the genetics business segment, and that at the end of the financial year, it will be moved over to the nutrition segment from a reporting perspective, albeit operationally it will be under the control of the nutrition business area. So all this resulted in adjusted EBITDA of 6.7 million, and excluding the negative non-cash fair value movement, adjusted EBITDA excluding fair value of £7.5 million. Now, as we look at net financial costs of 2.8 million, this relates mainly to interest associated with lease and debt, which totaled 2.4 million. We also had FX losses of 0.4 and movements on derivatives of 0.2, which were offset by interest income of 0.2. For the same quarter last year, we had significant credits associated with the movement on the derivatives, which is creating the quarter-on-quarter delta. Moving on to the next slide, so we can focus on the cash flow. So as Trond noted, quarter one is traditionally a difficult quarter to navigate, with 2 payments under our take or pay contract in nutrition. In this quarter, those payments totaled $12.4 million in comparison to 5.8 million for the same period last year. And this was the main driver of the cash outflow. This difference in payments is due to us having a much higher balancing figure under the contract due to lower sales and inventory levels within financial year 23 versus financial year 22. This, coupled with overall lower sales levels in both quarter 4 of financial year 23 and quarter 1 of this year, has resulted in lower overall cash from operations. It should also be noted that the next payment under this contract occurs in the 3rd quarter of this financial year, so it's June 24. As Trond noted earlier, in the same quarter last year, we had a significant inflow, which was driven by the very strong quarter 4 and quarter 1 genetics, as the competitor was out of the market. And also, of course, the better sales within the health business area, which has not materialised this year due to the points that Trond noted. Given the lack of cash generation in the quarter, we maintained moderate CapEx with £1.1 million being spent. And this was mainly maintenance CapEx for our site in Iceland and also our nutrition facilities in Thailand and the US. Interest and taxes of £3.2 million was mainly made up of tax of 1.2 million, which was associated with our Norwegian genetics business, and interest of £2 million, which was associated with the servicing of our debt and also the leases that we have in place. In terms of the leases, as Trond noted, we've made the decision to decommission one of the vessels, and as the work commenced to do so in January 24. Whilst We will still see some cash effect in the second quarter with the costs to decommission and also paying for the PSV whilst we decommission. We expect that as we no longer have that vessel, that the cash cost of leasing will be reduced by £1.1 million per quarter. Now, with cash and available liquidity of £21.1 million and £33.4 million respectively, we still retain a really strong balance sheet as we move into the future and all that faces us. So back to you, Trond.
Thank you, Septima. And let's then go over to the last part of the presentation on outlooks for the rest of the year. In short, we are trading in line with expectations for the year. We are in a very busy year, and as I started with saying, we have had a very busy first quarter. We are in a very busy year, and we intend to continue our efforts to make sure we take out the potential of the group as well as the different parts of it. In genetics, we keep good visibility on salmon deliveries for the full year. This is a market where you are forward, so you're having good visibility, and we keep on having that also in the full year. And we do not say, so noted, and we do not expect any effect of the ISA incident in terms of a delivery capability for the remaining part of the year. Also on genetics, continue to work to develop our growth vectors in Chile and Trent in order to close the gap to profitability as soon as possible and to get profitable as soon as possible. This is a key focus for us, and we have good development there in the first quarter, as I mentioned. Genetic services still from a low base and will continue to grow throughout the year, helped by new services added to that part of a profitable business. In advanced nutrition, we expect to continue to do well in a soft market. We do not bet that the market is suddenly turning, rather focusing on making the most of the market that is there. That has been a recipe that has shown very effective over the last years. And we will also make sure that we continue to position to be very strongly positioned when the market again turns, and it will. In health, we will be focused on filling the capacity of the remaining CleanTreat vessel that we have operational, migrating to a new business model throughout the year. Focus will be on cost, of course, to keep them as low as sensible in a transition period. We also expect that Salmosan, that is getting a new life, and sale of Salmosan will continue as it has for the remaining part of it. And with these words, we end our presentation and we are open for questions.
We've heard a lot about fish health issues, and you referenced some of those in your remarks. In your view, what are the most pressing needs for the fishing industry right now? Is efficiency, growth, health, etc.? And then how are your products positioned to benefit from their needs?
It's a very good question, to be honest. And should be a long discussion in the salmon industry around the topic. I think what the salmon sector is faced with, and I can just relate to Norway, but it's also applicable for other regions. They're faced with different things. I think sea lice is still the biggest sustainability issue, but they have gill health issues. They have issues related to jellyfish and all the diseases that partly, if you look away from the jellyfish issue that is particularly for this year in Norway, most of the other issues are related to, of course, normal farming, but it's also related as a cause of the sea lice. When you are delicing with, especially mechanical solutions, you are weakening the fish, and then you get all these following fish health issues that is a consequence of that. How does this resonate with us. The one effect that we don't like is the effect that we got in December, where fish health issues actually caused stop in a cancellation of orders for us because the fish was too weak or couldn't be treated. So that's a negative effect short term. The longer term, if you look at this wider picture, you see that this could only be solved by more sustainable means in terms of medicinal solutions and through also, I would say, through genetics. Longer term. So in that regard, we should be very well positioned, with the suite of solutions that we have sea lice treatment within health, but also within genetics. This needs to be solved by more robust fish that is not only growing quickly, but also can resist diseases. So we should be perfectly positioned to that if you look at this over the medium long term. This is what we are working. This is the core of what Benchmark is about.
Thank you. If you look at the last financial year, for example, how many salmon eggs did you supply in the year, and what percentage of the total market would you say, would you estimate that was?
I'm so glad to delegate those kind of questions to Septima. Septima, you are the number person.
Last year we sold over 330 million eggs. Last year was slightly anomalous in terms of the market share because our competitor for a part of that year would have been out of the market within that financial year. But on a normalized basis, generally, us and our main competitor are 50-50 in terms of market share of the open market for salmon eggs.
I think you've already touched on the second part of the question then, which was about who would you consider to be in that area your main competitors and what market share do they have?
I think if you look at the total market, we are the two main specialist providers of salmon genetics, and we are kind of head to head. We have a little bit different positioning in different markets. We're just a little bit more granular on that. If you look at Europe as a total, we are the biggest, but they have a stronger position than us in Chile. But we have developed it very, very head to head with them in terms of market share over the last year.
Thank you. You highlighted strong growth in marine fish markets in Europe in the quarter. Would you attribute that to any specific factors?
What I'm saying, I'm saying that the marine fish market, it is the portion of what we do in the nutrition business, in the Mediterranean. The markets there have been difficult during last year and even during the third quarter. What we see is an improving market situation there now. But the point I made was that despite difficult market conditions for sea bass, sea bream, which are the main chunk of this, we have been doing well within marine fishing. So we have performed regardless of how the market has been looking. So that's what I try to convey.
Thank you. And you talked about ongoing innovation in the presentation and how SnapArt was the latest successful launch. Got a question here. Could you just provide a little color on what that is exactly and how it helps your offering to customers?
Yeah, SnapArt is just an extension of what we have done before, but probably a little bit more sophisticated. It's a tool based on, I would say, artificial intelligence. It is used to just in a split of a second, just take a sample of live feed and tell the farmer exactly what kind of stages they are in, how they are doing. So it helps the farmer to much more precisely feed with live feed. That's what it does. Historically, that has been done through a microscope, and then you have to look at the microscope, and then you have to manually count and look and evaluate. It took for ages to get the same answer that you can get now in a split of a second. So really helps the farmer to be much more precise in live food feeding, feed feeding, and be helping them to be more sufficient. So the concept we are doing is that we're not only coming with nutrition or live feed, we are also very close to the customer, telling them how can they apply this as efficiently as possible. That that helps them to perform better, but it helps us to get a closer relationship to the customers, which again open up for our offering, wider offering with existing customers, but also new customers. So that's the concept we are working on. You know, we're not only coming with a package of feed or nutrition or live feed. No, we are also a very close knowledge partner to the customer, helping them to be more efficient, and that's appreciated throughout the whole year.
Thank you both, Trond and Septima, very much for this presentation. Thank you all.
Thank you very much for attending. Thank you.